Most people, they make investing sound complicated. They act like investing or making a decent amount of money from stocks is some big mystery. But the truth is, it's not. It's literally just patience and compounding. And it's picking the right plays, the right stocks that are undervalued, and holding on when everyone else gets scared or just tired of holding. Everybody wants a lot of money. Everybody wants to be a millionaire, or a decent amount do, but very few people are willing to wait like one. So today I wanted to jump on here and break down 5 companies, 5 real companies, all proven, all still with upside, that could make you a decent amount of money, maybe even a millionaire, if you understand one simple rule, one simple thing. That is, wealth comes from time in the market, not timing it. So let's get into it. I want you to lock in, because your future self will thank you. Now, Amazon started in 1994. At first, it was a tiny online bookstore run out of a garage. Today, it's everything. They built the ultimate machine: convenience, logistics, cloud, all of it. But the real magic isn't the website where people shop, right? It's AWS, Amazon Web Services. That is where most of their profits come from. And profits are everything, right? To a company, to a stock wanting to go up. But in the beginning, most people, they doubted Jeff Bezos. A lot of analysts would say something along the lines of, Amazon is a money burner. A lot of critics pointed to the endless losses they had. The skeptics, they were loud. They were very loud, and for a while, they seemed right. Then Amazon, they made a series of decisions that literally changed everything. First, it survived the dot-com crash. And that was a big deal because a lot of companies, they failed. It then expanded relentlessly. It went from books into electronics, into household goods, into groceries, and more. They were selling everything. It then launched Amazon Prime. Now, Amazon Prime was amazing because it turned slow shoppers into loyal repeat customers. That was consistent money month after month. And they did this by promising them fast, free shipping. Consumers, they wanted their products quick. Later, Amazon Web Services was built. This was a cloud platform that became a massive profit engine for the company for years and years and years, and helped funded the company's growth. And I'm pretty sure most people don't even know what AWS is still now. But even after all of that, people keep sleeping on Amazon. I hear it now. I think it's because the stock's been trading sideways for a while, right? At times, and it's not like a high flyer like some of these other tech companies. But this is how long-term wealth works. The boring accumulation years are where you get in, and this is where the next run builds. And when you look at their logistics network, their AI tools, their entry into healthcare, I believe this company is setting up for the next decade run. Now, love him or hate him, Elon Musk, he did change the game. Tesla launched in 2003. At first, Tesla just made these electric sports cars that honestly look like toys to a lot of people. And by 2008, the company teetered on bankruptcy. Investors and journalists and the general public mocked Elon Musk. Elon, who is going to buy expensive electric cars? Now, the prevailing story was that EVs were niche and impractical. Then Tesla rewrote the script. The Model S arrived in 2012. It stunned everyone. That car literally changed how the world saw electric vehicles. It had long range. It was fast. There was some level of luxury design to it. Now, it wasn't just an EV, right? It was a statement. The statement was that electric cars could outperform or perform just as well as gas cars. Then Tesla went mainstream with the Model 3. The Model 3 was the real breakthrough car for the masses, not just for the early adopters. It literally became the best-selling EV in the world, and it turned Tesla into a household name. Everyone knew of the company Tesla. By 2019, Tesla posted consistent profits, and it joined the S&P 500, legitimizing the company in the eyes of the media, of mainstream people, mainstream investors, whatever, you name it. Now, Tesla, in my opinion, is extremely overpriced. If you take in the stock splits, it is trading at over $6,000 per share. Me, personally, I would not be buying this thing here. The pig needs to be slaughtered. A lot of downside is what I see for it. And when that happens, it might be a good time to jump in. So let's talk about Apple here for a second. Everybody knows the company Apple, right? It's a $1 trillion monster, $1 trillion company. There's iPhones everywhere. It's global. But what most people don't know, or what most people forget here, is that in the 90s, Apple was basically on the verge of going extinct. Steve Jobs, he got kicked out. PCs were pretty much running everything, and analysts were very skeptical, literally saying things like, yeah, Apple's finished, Apple's done, we don't think it's going to survive, etc. It was ugly. Then in 1997, Jobs, he comes back and he just flips the whole entire script. What he does is he stops chasing specs, and he says things that actually matter. Things like, let's make stuff people actually love using. The iMac comes out, it's bright, it just stands out. Beautiful colors, clean design. It really just stood out for the most part. Then came the iPod, and this was a whole new way to listen to music. People were obsessed with the iPods. Everyone wanted one. And in 2007, boom, the iPhone drops. That right there wasn't just a new phone. Once you've got one Apple product, you pretty much just ended up with all of them. That's how it kind of worked. And that right there for a company is gold. That is what keeps people locked in and coming back year after year. Think about this. If you threw $5,000 into Apple around 2000, when it was still struggling, it was considered a risky play. 10 years later, by just being patient and having conviction, that same $5,000 was worth over $500,000. $500,000. That is not luck. That is what I call patience. That's what happens when a company keeps executing and you just keep positioning in that stock year after year. Apple's whole playbook was simple. It was to build great products, scale what works, and make it so that it was inconvenient to leave the brand. They didn't chase quick profits. They built love first. Then they monetized it, and the people stayed. Here's the part most people miss. Though Apple stock, it's rarely been cheap, you weren't necessarily buying a deal, right? You were paying for certainty. You were paying for a company that was consistently evolving. And honestly, that's okay. Sometimes paying more makes complete sense. If the company is projected to keep making profits or, keep growing and keep delivering, then it's a different story. Now, today, the iPhone growth is slowing. Everyone in the developed world, in developed countries, they already have an iPhone, right? It's accessible. Regulators, they're watching the app, right? They're watching the app store, and the next big play, the next big bets are things like AR, AI, maybe even health and tech, right? Those are exciting, but still unproven. So if you're investing in Apple now, it's not your 10x moonshot, right? It's literally just your steady long-term compounder, the one that slowly grows over time. The company that's going to keep delivering and keep paying you just for being patient. And if they end up pulling it off again with AR or AI or whatever's next, Apple's got that juice. Apple's got another decade of dominance in the bag. Now, speaking of long-term winners, this is probably one of my favorite tech stocks. Let's check out another company that quietly builds wealth over decades. Microsoft. It was founded in 1975. It ran the PC world for years. Windows, Office, basically everywhere you look, Microsoft was there. By the late 1990s, growth was slowing. Things were looking a little dim, right? A little bit stuck. Then Satya Nadella, now CEO, comes in and he stops worrying about the past, right? And he starts building the future. Cloud and subscriptions, they take center stage. Azure becomes a serious player. Office moves to 365. LinkedIn and GitHub, they expand their reach, and suddenly Microsoft isn't tied to a single product anymore. Revenue becomes predictable, it's reoccurring, and it's massive. Here's the thing, just like all these other stories, someone who bought $5,000 of Microsoft back in the 80s, early 90s, or an early employee still holding that stock, they didn't get rich overnight, right? They got steady compounding over decades. Decades of growth while they just sat there. That's how companies like this make millionaires. The lesson here is boring, it doesn't mean weak. Execution always beats hype. Culture matters. Cash flow is going to give you the flexibility to pivot. Now, Nadella did admit some mistakes, but he doubled down and he delivered. Quick reality check here. Reinvention isn't easy, right? You can't just announce a pivot on paper. You actually have to stick through it and make it happen. Here's the takeaway for anyone that's watching. Microsoft shows how patient, disciplined investing pays off. You don't need to follow the hype. You don't need to follow GameStop or these other tiny, high flyers. What you need is steady execution. It is what pays off in the long term. You need to choose a company that executes, one that adapts and compounds their growth over time. That is how ordinary people, ordinary investors like us, they can turn small stakes into something serious, into serious wealth, decent money. If you study how all these companies grow, you can take those same principles and apply them to your own investments. Hold quality, be patient, and let compounding do the work for you. Speaking of companies quietly dominating the future, let's talk about the last company here, NVIDIA. Now, if you've been watching the market or if you're interested in stocks, the past few years have been crazy. You already know that NVIDIA has been the face of the stock market or the face of the AI boom. But here's the thing. Most people still don't get how deep NVIDIA's moat is. Think of NVIDIA as the engine behind AI, gaming, cloud computing, and even self-driving cars. Big names like OpenAI, Tesla, Amazon, Meta, all these companies need their chips to get things done. Now, NVIDIA started in '93 making graphic cards for gamers. For years, it was a small, but it was a solid company. It had useful tech, but not the kind of thing that changed industries, right? Then two shifts changed everything. First, the demand for the GPUs exploded. From new uses outside of gaming to things like crypto mining. But the bigger and longer term change that really changed everything was artificial intelligence. Modern AI models, they needed massive parallel processing, and NVIDIA's architecture, it happened to be the best tool for the job. Suddenly, NVIDIA wasn't just about frames per second, it was powering the AI revolution. It was the future of computing. And here's a simple example of what NVIDIA could have done for you. Someone who bought $5,000 worth of NVIDIA stock in 2016, this was less than 10 years ago, could have easily seen it top over 100,000 by 2021. Some investors, they got 10x returns or more in just a few years. That kind of gain, it usually comes from structural shifts, tech revolutions, creating demand, or seeing the future that nobody expected. Now, NVIDIA built the right hardware at the right time, and then it scaled massively. The lesson here for people and investors is massive returns, they often show up when a company becomes the standard tool for a brand new wave, a brand new problem. So if you spot the right technology early, the upside can be huge. NVIDIA is an exciting stock, right? But it's also very volatile, and that's what makes it exciting. AI demand can swing. Competitors like AMD and Intel and other cloud providers are pretty much closing the gap. And their GPU demand, it moves in cycles. Treat NVIDIA as a high upside, higher volatility position. You want to size it reasonably. That way you don't have panic attacks late at night. Have clear rules, and you want to let the long-term thesis play out. Big opportunity, but manage your risk. Bottom line is, if you spot any structural shifts, you want to position yourself early. Companies like NVIDIA can create life-changing returns, and they come and go. They're always here in the market. Here's the thing. Amazon, Apple, Tesla, Microsoft, NVIDIA, what they all have in common is 5 traits. They kept showing up over and over. They have big vision. Each went after massive markets, not small niches. 2, durable moats, right? Something that keeps customers coming back. Prime, iOS, superchargers, Azure, you get the idea. 3, they have obsessed leaders. Bezos, Jobs, Musk, Nadella, Hung. People who live and breathe for the company. 4, reinvestments. They reinvest profits back into the growth of the company. They're not just handed to their shareholders. They're invested into the company to keep it growing. And 5, compounding. Those small wins over time, they're going to stack over years. They're going to turn modest stakes into life-changing results, life-changing money. But here's the kicker. None of these were overnight hits. maybe NVIDIA. The magic was boring, it was consistent, and it was just consistent execution over time. Now, how do you use this today in order to grow a decent amount of money? You want to think of it as a simple checklist. Does the company solve a huge problem? They do? Interesting. Look into it a little more. Do customers stick around, and do they bring others? If so, people like it. Is leadership thinking years ahead, and are they showing skin in the game? You see leaders purchasing stock with their own money. Is the product actually getting better every single year? No one wants something outdated, right? And 5, are profits getting bigger? And if they are they reinvested into long-term advantages? If the answers are mostly yes to all these questions, you probably have a long-term play or a long-term winner on your hand. But remember, risk is real. You want to protect yourself, limit any single bet so one idea can't wreck your entire portfolio. But anyways, the important thing here is that you want to look for companies with vision, moat, execution, reinvestment, and compounding. You want to find that company, you want to size in, believe in your conviction, and let time do the work. Let time do the heavy lifting for you. Here's the single most important takeaway here. You want to think long term and stay patient. Being patient will get you a lot of things. Every company we covered here, from Amazon to Apple to Tesla to Microsoft and NVIDIA, all of these companies, right? They all hit moments when the story looked dim, right? When the story looked finished. Headlines were bad, investors bailed, yet behind the noise, there were a lot of people, a lot of visionaries who kept building and ignored that noise, solving the massive problems that they set out to go do. Now, those people, the people who ignored the short-term noise, the short-term drama, and focused on the long-term picture here, the bigger picture, they were the ones who got rewarded, right? They were the ones that got the life-changing rewards, generational wealth, but none of it happened overnight. It was long, it was consistent, it required conviction, resilience, and the patience to let the long-term investing do its thing. You don't need to catch every winner. You just need to pick one, maybe two truly great businesses, get in early, and that investment can transform your financial life. Markets will always be noisy. People will always have something to say. There will always be doubt, but visionaries and people who tune out the chatter and focus on the fundamentals or the technical analysis and think in terms of things like decades, not days, that is where the real results live. Finally, if you made it to the end of this video, I do appreciate you. And if you enjoyed watching it a little bit, hit that like and subscribe button for me. Anyways, it's Finance Philly. For more practical investing lessons, there are a couple of videos on my channels. Go check them out. But anyways, once again, if you made it to the end of this video, I appreciate you. And I'll see you guys on the next one.